More often than not, the GEPF members are confronted with half-truths about the state of the pension fund's financial soundness. The GEPF members and pensioners are often told that their pension fund is in the red and could go bankrupt anytime and will lead to them not getting their pensions when they go on retirement. However, these prophets of doom don't tell GEPF members is that their fund has grown in leaps and bounds from a 127 billion rands fund in 1996 to a 2.3 trillion rands fund in 2023. This discussion seeks to clarify how the GEPF has managed this good financial performance over the years and how the fund has maintained its resilience even during difficult economic conditions, both domestically and globally. To put this in a proper context, I am joined by GEPF's Manager Investment, Mr. Siyabonga Mthalane. Mr. Mthalane, let's start with the investment strategy of GEPF. I mean, how do you, formulate the strategy, generally speaking?
Thank you, Thabiso. I think what we first need to understand is what type of an investor the GEPF is.
Mm-hmm.
GEPF is a long-term investor with a long-term investment horizon. Its investment strategy is guided by a liability-driven approach, which is conducted regularly to determine the strategic asset allocation of the fund, as well as the applicable investment limits.
Sounds good. Let's also touch on a very important issue, the actuarial valuation. I mean, how often do you do it, and if you do conduct it regularly, what was the last finding in as far as that is concerned?
So according to the GEP law, the fund must conduct the actuarial valuation every 3 years. The last actuarial valuation that was conducted was done as at the 31st of March 2021, and the outcome of that valuation showed or revealed that the fund is 110.1% funded.
110.1% funded. I mean, in the broader scheme of things, what does that mean? Because it's not a figure that is usually been bandied about, but the GEPF, it seems like it's a very important figure. What is that all about?
So what it essentially means is that the fund is financially stable. The fund is financially sound. So with 110.1%, it means that the fund has a surplus of 10.1%. So in other words, if I can put it in layman's terms, for every R1 that the fund owes in terms of its obligation, it has R1.10 available to cover its obligation. Now this demonstrates that the fund is stable and it does not need any form of bailout.
So I suppose, what is always uppermost in the minds of members is how is this money being invested? Because people want guarantees that as soon as they retire, their investments will be secured. What do you say to a person who's always asking themselves whether you guys do the right thing or not in as far as investment is concerned?
Look, Thabiso, that's very important. It's very important that we put our members at ease. They understand how the GEPF invests its assets. So what would usually happen post the ALM exercise, and then we would have the outcome of the ALM exercise would be the strategic asset allocation. So once the strategic asset allocation has been determined, it needs to be approved. So in the GEPF context, it will be approved by the Board of Trustees in consultation with the Minister of Finance. Once it is approved, then the GEPF has to implement it through the appointed investment manager.
If you can just expand on ALM, because to me it sounds like an abbreviation of something very important.
So the ALM is an abbreviation for asset liability modeling. So it's basically a mathematically driven sort of modeling exercise, which is used to determine the optimal asset allocation as well as the limit that will align the fund assets to its obligation. How
often does the GEPF review this investment mandate that you spoke about, board of directors, the minister, and all of that. And how often do you review it, if at all? And when was the last time did you review it?
So it's kind of like an exercise that we used to follow from one step to the next. So once you have determined your strategic asset allocation, and once it has been approved by the Board of Trustees in consultation with the Ministry of Finance, then it follows that you need to then review your investment agreements. So the last one that was done was about a year ago, and it was then signed as at the end of March 2022.
So what were some of the highlights of that review?
So the most notable highlight of the investment agreement review was the segregation of the investment mandate. So the mandate was separated into two, the one for the unlisted portfolio and the one for the listed portfolio. Now, this is important to just ensure that there is a strategic focus in each of the two broad categories to ensure that these asset classes are invested effectively.
Yeah. What about ESG? I mean, does GEPF consider ESG when contracting?
Yes, ESG plays a very critical role in the investment decision-making process of the GEPF. We should remember that the GEPF is a founding signatory of the UNPRI. So this means that the GEPF is committed to the principles of responsible investing when making investment decisions.
Yeah.
Now, the ESG principles as well as the responsible investing principles are all embedded in the investment mandate agreement with the investment manager.
How do you then integrate ESG into the portfolio?
So the GEPF has a clearly defined responsible investment policy that is publicly available and published. Now, contained in this policy are basically the four pillars. That is ESG investments, ESG engagements, industry collaboration, as well as ESG reporting. Now, this is very essential because it ensures that the GEPF is committed to the responsible investment policies through its investment activities, and it's also just committed to shareholder activism. It also means that the GEPF maintains transparency by ensuring ESG reporting.
Sounds good. Let's talk about something else as well that is quite important. There's something called impact investment. What is the GEPF's position on impact investments?
So one of the fund's investment beliefs is that the fund must play a meaningful role in the development of the South African economy. Now, this means that the fund is aware or is cognizant of the developmental needs of the society, be it infrastructure or social needs or even energy needs.
Yeah, that is important. Energy needs, particularly at the time when we are experiencing so much load shedding, which has got an impact on our economy and all of that. I mean, if we can just expand more on infrastructure investment, particularly in an area like that.
Yes. Look, the GEPF has a developmental investment policy. That's where we outline the type of investments that we will consider when making such an impact. So from the GEPF point of view, we will consider any sort of bankable project in this space.
Yeah. So the PIC is your asset manager.
Yeah.
Why is that?
So the relationship between the GEPF and PIC is historic. It started at the time even before the GEPF was a standalone entity. Before 1996, before the office of the GEPF was formed, it used to be a division within the National Treasury. And PIC, even back then, was managing the assets of the GEPF. And it was performing very well. I think at the time, the 10-year return was an annualized 8.6%. So when the GEPF was formed as a standalone entity, it felt no need to dissociate that itself from PIC.
Yeah. Are they meeting their benchmarks? What is the latest financial status tells us?
Yes. So in the last financial year, the PIC returned a 12.76%, and the benchmark returned a 11.68%.
Yeah.
Now, this means that the PIC outperformed the benchmark. Now, if you take that or you bring context to that, now the fund, just in the last financial year, made an investment income of about 255 billion rands. And
wow. That's a lot of money indeed. So how are GEPF's investment structured and governed?
So the GEPF has investment documents that are meant to ensure proper governance of investments of the fund. These documents include the investment policy, the investment mandate agreements, as well as all the applicable annexures.
Yeah.
One of the annexures, which is very important, is Annexure B, which outlines the guidelines and parameters under which the investments must be managed.
Yeah.
Now, included in these guidelines is this overall structure of the portfolio, the fees, the benchmarks, as well as the risk parameters.
What about monitoring mechanisms for investments? I mean, how do you approach that as the GEPF?
Yes. So the Office of the Principal Executive Officer, we usually abbreviate as PEO, is the operational arm of the GEPF. Now, this office has different departments, and one of the departments is the investment unit. Now, the investment unit is responsible for the overall monitoring of the investments of the fund.
So let's pick up on this very important aspect. And that aspect is our economy. We are going through turbulent times in our economy. Where are opportunities as far as you are concerned? Where are the challenges? I mean, interest rates are a major problem in the country. And like I said, I mean, the economy of the country is not really looking good. How are you able as GEPF managing to navigate?
Look, Thabiso, it's a difficult sort of time for everyone. And I think the investment landscape has been very volatile. It's like we came from the impact of COVID straight to the geopolitical events, which none of us would have predicted. And it presents a very challenging environment, and especially for investments. So the geopolitical tension, which was probably dominating most of the previous financial year, had a very significant impact on the macroeconomic environment. We saw inflation going high on the back of challenges around the supply chains, as well as the energy prices and food prices. But with that, then the central banks will respond to try and halt inflation, rapid inflation, by increasing interest rates over time. Now, this tests the resilience of investment portfolios, which is very important, and especially for the GEPF being a diversified portfolio, a portfolio of multi-assets, which is able to sort of cushion the portfolio from these adverse economic events.
I've also noticed that GEPF invests on developmental projects and unlisted assets. Why is that?
Yes. So the unlisted investments are very important to ensure that we diversify the portfolio and also that we have alternative sources of returns. Now, the investments in this space tend to be very large and complicated in nature. However, research has shown that in recent time, the investments in the unlisted space or this particular asset class in general has outperformed the traditional asset classes.
Yeah, let's expand further as well on developmental projects.
Yes. So again, the developmental projects are also sort of alternative sources of returns. I think they are very important in terms of fulfilling the GEPF's objectives of playing a developmental role within the South African economy and the broader continent. Now, these projects, they tend to be also very large and long-term in nature. However, they are very important in ensuring that while the fund is deriving returns from them, but the fund also have a real and a meaningful impact.
And let's talk of offshore investments. There seems to be a limit from GEPF compared to other pension funds. If you can expand on the reasons there as well, please.
So our allocation to the offshore investments is not necessarily a reflection of the aversion towards the asset class. Now, purely what determines the strategic asset allocation of the fund is the ALM model, which we run, and then it shows us the different asset classes as well as the applicable limits. So at this point in time, so what we allocate to offshore is basically based on the outcomes of that exercise. It has nothing to do with the aversion to the asset class. Perhaps in future, when we run the very same exercise, it would give us an indication that we need to increase the allocation to offshore, and perhaps we will do that. But at this point in time, we are sticking to the outcomes of the exercise that we do to determine the allocation.
Now, let's talk about a very important aspect, the recommendations of the Mpati Commission, because it looked into very serious elements or serious parts of what you do, particularly from an investment point of view. What are the key elements that came out of the report, particularly as it relates to recommendations?
Yes, Thabiso. So the fund has already implemented some of the recommendations that are relevant to it. So one of them is the reviewing of the investment policy and just to strengthen the investment guidelines of the fund. We have already conducted an asset liability modeling exercise and determined the new strategic asset allocation, which is also being currently implemented. Over and above that, we have already signed the new investment agreements with the PIC, which contains the new benchmarks as well as the mandate for both the listed and the unlisted portfolio. The fund also has done a lot in terms of strengthening its internal monitoring activities as well as investment oversight.